Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you what you need to know before you go, and that is going over the economic data, see how that impacts the overall markets, and then talk about some option strategies we can implement into our portfolio based on the assumptions we come up with. And make sure you smash that like button before you go. It really helps, feeds those bots to run out there. And don't forget to comment. If you guys have any questions, you want me to cover anything in the next videos, throw it over there. I circle back around, make sure everybody's clear of concept. So feel free to comment away over there. All right, so economic data. Something we talked about yesterday was the crude oil inventories. We saw a build. First time in a while, saw a 2.4 million barrel build, expected to be a drawdown of almost 3 million barrels. So a huge upside in inventories there. That's despite the fact that we were releasing all of those inventories. Now, something to talk about with the production here in the United States, we have gotten back up to in and around that 11 million barrels, which was pre-COVID levels for production of oil. One thing is global production is down and the global demand has spiked. So that's what's causing crude oil to move a little bit higher here. One thing that everybody's talking about is the fact that the United States has like 30 permits to start producing even more oil, but the current administration is not allowing those permits to go through. So that's a lot of this upside is the folks are saying, hey, there is more supply out there. We have this demand. Well, that means the prices are going to move higher here. So that's the product we're seeing, despite the fact that usually when we see massive increases in crude oil, that kind of signals a lack of demand. That's not necessarily what we're seeing here right now. And then let's move on to the other markets. We've got the bonds. They're going to continue to slide here as we're seeing this price of these bonds goes down. That means interest rates are rising. One thing we're seeing on the shorter end is that those interest rates are not really rising like we would expect. So that's a bit of a signal here where we're getting this inversion and the steepening in the yield curve that things are not necessarily all hunky-dory here. It's a bit of a disconnect between interest rates, which is usually why we start to say there's a signal that there's going to be a recession. It doesn't say the timing of that recession, but it's just basically telling us, hey, you know, you're really close to one around the corner here. Gold futures, you know, this market really hasn't gone anywhere for quite some time, and we're just kind of getting really comfortable at around this level, which was the previous financial crisis high there. And we're not really seeing any volume trade here. We're just seeing the market kind of flux back and forth. Nobody's really interested. That number is so prominent that everybody knows it. Not necessarily everybody has traded it, but since they recognize that number, there's not that, again, that angst or that that need to trade at that price. Okay, so we're going to see this fluctuate around. Risk is now to the downside here in gold futures, folks. I'm going to be talking about an opportunity here later on this afternoon in my webinar for basically cracking the code to trading options. We're going to drill down on different option strategies. Well, today I've got one that's a bearish one, limited risk. We'll talk about that, and I think we can set this up for gold. Yes, last week we had somewhat of a bullish strategy there for gold. That's not really working out. With that said, I think without that push to the upside, a lot of these gold indices are starting to look a little bit more weak, so we can take advantage of that to the downside. That said, not really understanding why Bitcoin is not really coming to the limelight here and not getting any extra love here in the markets lately. So with that said, it's starting to look a little bit weak here for Bitcoin. As a matter of fact, NVIDIA and things that are associated to Bitcoin are starting to look a little weak before that. So another opportunity to take advantage of some downside there. NASDAQ has continued to slide here. We're seeing a little bit of support here. I've been talking about downside risk here in equities for a couple of days now, and we're starting to see this follow through with the E-mini S&Ps as well coming up here. But the Dow Jones Industrial Average, I talked about Dow Jones coming down. It was at the point of control, finding support on this 50-day simple moving average. Well, that's starting to come through here. We're staying above that, And remember, this point of control is acting as a magnet. It's kind of drawing it back up there. So Dow Jones, if we start seeing more of a correction here, I think it's going to be supported. And I talked about how E-mini S&Ps would feel like it was more of a correction than what we were going to see in the NASDAQ and the Dow Jones. Well, the reason why is we've got the point of control just slightly above the 50-day simple moving average there. Yes, that 50-day will act as a support and resistance. But remember, anytime we line up the points of control, which is where we've all transacted, the market really has some strength getting drawn to that area. So with that said, I've been talking about more of a correction here in the E-mini S&Ps, not talking like 10% correction, just a rollover here as folks are that have gotten involved in this. And I talked about with the E-mini S&P not really getting the move to the upside. They probably weren't going to get as much exacerbated move to the downside like the NASDAQ. Well, that's all come through. Now, with all of that said, we said, all right, didn't have upside, didn't have that pullback, but now people are concerned over there in the NASDAQ, are going to look for value here. All right, that's what we've seen roll over into the E-mini S&Ps. But folks, you have to remember that if we start seeing some weakness in the markets, the weak hands, which are really in here in the E-mini S&Ps, the folks that have bought stocks in the E-mini S&Ps to look for value, haven't really fallen in love with those stocks yet. All right, they haven't had them in their portfolio long enough to really love them. Right now, they're looking at those as being good assets in their portfolio because they performed well during this time. Well, that said, they're going to be really quick to cover those trades if they start correcting. So E-mini S&Ps could get a little overextended at this point to the downside because of all of those levers and pulleys that we were talking about there. So risk is still to the downside in equities, a little bit more so I'd be concerned in the E-mini S&Ps. And you can see with the economic data, one of the things that I didn't talk about was the jobless claims that we had come out today. Pretty important because those continuing claims, jobless claims numbers are really suppressed, making us think that the economy is doing very well. That's not necessarily the case. These folks are discouraged workers. They're falling off the unemployment list so they don't look like they are unemployed. They are no longer a statistic. They don't have a job. They aren't unemployed because they aren't looking. So that's what we're seeing with these unemployment numbers. So a lot of people are talking about this has really caused some problems, and they've tinkered with the number here and the way that we find that number, so it's a little bit off. All that said, though, economy, it's a little bit iffy right now as to what is going to happen going forward, which is what I'm more concerned about. Not necessarily the here and now, which we're hearing some earnings coming out, and they are better, but they are a little concerning. So keep your eyes out for the webinar this afternoon. Make sure you subscribe because I do pop in and announce for especially these morning videos. I just kind of come in when I have the opportunity. So make sure you guys are subscribing with the little bell. And don't forget to smash that like button for me. And if you have any questions, comments, or anything else, I'll circle back around, make sure everybody's clear of concept. Hey, if you guys want to drive the commentary here, throw stuff over there in the chat window there, and I'll make sure that we'll cover that in the next video. All right, that's all I got for you guys. Hope you guys have a great trading day, and check out the webinar this afternoon. We're going to be showing a limited risk short strategy. Markets right now, it's going to be pretty easy to maybe find some strategies that we can implement on bearish moves. So check that out. Make sure you subscribe. And if you can't take that, take it easy.